We go straight to business with Stephen, and he's starting in Egypt. The Suez Canal is still blocked after more than 48 hours.
That's right, the container ship Ever Given still stuck on a sandbank in the southern end of the canal, completely blocking traffic through one of the world's most important shipping lanes. Authorities have been working with tugboats and dredgers to try to free it, so far without success. The size of the ship, which is longer than the Eiffel Tower, has made moving it very difficult, while a backlog of more than 150 vessels are waiting to use the canal, with delays potentially costing billions of euros. The ship's Japanese owners have apologised to those affected. Yuka Royer has more.
Like a blood clot blocking an artery, the Ever Given's 400-metre-long hull remains wedged across the Suez Canal, and it's having a huge impact on the global supply chain, which has already been disrupted by the pandemic.
The Suez Canal is one of those absolutely strategic waterways of the world, like the Panama Canal is. It carries about 12% of world trade each year. So you get something like this, a ship effectively blocking it, you actually really are blocking that trade flow.
Tugboats are struggling to dislodge the 224,000-ton vessel owned by a Japanese firm and operated by Taiwan's Evergreen. The ship lost control amid high winds and got stuck in the sand on Tuesday. It may not be freed until the tide reaches its peak on Sunday or Monday. Meanwhile, dozens of other container ships have been lining up to pass through. The main alternative route for ships travelling between Asia and Europe, via the Cape of Good Hope on the southern tip of Africa, takes a week longer to navigate.
Because of the tightness of the supply chain and because of the sort of just-in-time nature of so much of what we do in society nowadays, that can become an issue.
About 30% of global container shipping volumes pass through the canal each day, carrying everything from fuel to consumer goods. That's worth almost $10 billion per day, or more than $6 million per minute, according to estimates by research group Lloyd's List.
Around 10% of the world's oil gets shipped through the Suez Canal, and news of this blockage had caused a jump in oil prices on Wednesday. Today, the international benchmark Brent crude is still higher than it was before this crisis struck. It rose from about $60 a barrel to $64 yesterday, around $63.65 today, even though it's down slightly on trading today. A similar picture on WTI as well.
What about stock markets then, Stephen?
European markets starting the day in the red. Mining and oil companies among those seeing their shares fall today. We're also seeing European markets follow on from the losses that tech companies had seen on Wall Street on Wednesday. That's the picture at the open in Europe. In Asia, there were gains on Japanese markets after the falls the past few days. In China, though, investors worried about the global shortage of semiconductor chips and the challenges that Chinese tech firms might be facing. Things are a little bit more muted on Chinese markets today.
And in fact, one of those Chinese tech companies is Tencent. It's also reported its latest results.
That's right, and its online video game business has helped to boost the company's quarterly revenues by just over a quarter. The profits in the last 3 months of the year for Tencent rose by 175%. Tencent's games Honor of Kings and PUBG Mobile were among the most downloaded in China and internationally over that period. Tencent is facing increasing competition in this area from the owner of TikTok.
Let's talk about tourism on the programme now. Figures are showing the real extent of the losses that have been suffered by the tourism industry due to the pandemic.
It's an absolutely staggering figure, $4.5 trillion in losses in 2020 for global travel and tourism. That's according to the latest report from the World Travel and Tourism Council. It means the sector's contribution to the global economy was cut in half in 2020. The organisation estimates that 62 million jobs have been lost worldwide from the sector. It's calling for the introduction of digital health passes, which will show if people have been inoculated or tested negative, to allow international travel to restart from June.
And finally from Stephen, the fashion retailer H&M. It's facing a boycott in China.
Last September, the Swedish brand announced that it would stop buying cotton from the XINJIANG region of China over reports of the use of forced labour of minorities there. The move has attracted fresh attention online after sanctions were imposed by Western countries over the treatment of Uyghur Muslims. After a frenzy of negative comments on state and social media, several e-commerce platforms have stopped selling H&M's clothes, and a number of Chinese celebrities have said they'll quit sponsorship deals with the brand. Sports brands Nike and Adidas have also come under fire for their statements about the situation in Shangjing too. Companies really seeing the continuing consequences of those decisions in the wake of those sanctions.
Yeah, highly controversial. Thank you very much, Stephen Carroll with Business.